Hi students, let's see chapter number 1. Our chapter number 1 is like fundamentals of partnership. Until now there was only sole trader, so whatever the net profit comes, he will take it. So now moving on to the next type of organization, partnership. In partnership there will be like 2 to maximum of 50 partners will be there. So coming to the partnership, there will be a conflicts and there will be like so much of issues involved in the division of net profit and various kind of things like salaries, commissions. So all those things will be like involved. So let us see how the net profit will be like divided among the partners and what are the various ways a partner can take income from the business. So the governing act for the Indian partnership is like Indian Partnership Act 1932. So according to Indian Partnership Act 1932, the partnership deed can be oral or written. So if there is like a written agreement means when the conflicts or issues come, they can like see the agreement on how they actually signed it. But what if the agreement is like absent? So the agreement can be, so there are like so much ways a partner can take up the income, that is like cash, in various forms from the business. So what are those various forms? The partner can like take in the name of profits, that is like the profit division at the end of the accounting period, or in the name of salary in every month. Then the partner earns like a particular commission for some sales. So how much percentage he gets commission for every month sales, and interest on capital and interest on drawings. So these are the various ways a partner can take cash from the business. So all these things, how to deal among the partners, those things will be like mentioned in the something called agreement, and that agreement is called as partnership deed. So the partnership deed can be in oral or in written form. So in the agreement there will be like many such things as we saw: profits, interest on capital, interest on drawings, salary, commission. All these things will be like mentioned in that partnership deed. So what if the partners have not like registered their partnership deed according to the Indian Partnership Act? We will see how to resolve those issues if the partnership deed is absent. Now we will see the rules applicable in the absence of partnership deed. If there is a partnership deed, we will know the rules of how to divide the profits, how to take up the salary and commission. If there is like no partnership deed, these are the rules that are applicable for the partnership firms in which they have not got their partnership deed. Now we will see the rules. The first rule is profits. So profits must be like shared equally among the partners. Whether there are like 2 partners or 4 partners or 10 partners, whatever the profits comes, they will like share equally irrespective of the capital contributed by the partners. Coming to the IOC. IOC means interest on capital. So interest on capital will not be charged in the case of absence of partnership deed. And similarly, interest on drawings will also be not charged. The same way, there is like no salary and no commission. And if we want to like admit a partner, admission of a new partner can be done only with the consent of all the partners. So the only one rule that is applicable, which means the only one thing which is like applicable in the case of partnership deed, in the absence of partnership deed, is like interest on loan. So in interest on loan there are like 2 types. One thing is like if the firm has like lended amount to the partner, then the partner no need to pay any interest back to the firm. But if the partner has like given his personal amount to the firm, then the partner will be like getting 6% of like interest on loan per annum. So the only rule which is applicable in the case of absence of partnership deed is like, so the partner will be receiving, the firm will be like giving 6% of interest on loan given by the partner to the firm. So just don't get confused with this thing. So if the firm has given loan to the partner, the firm won't be expecting anything. But if the partner has like provided loan to the firm, then the firm will be like paying back to the partner the interest at the rate of 6% per annum. So we will see once. So now we will see once again, profits will be like shared equally. no interest on capital, no interest on drawings, no salary, no commission, and no interest on loan from the firm to the partner. And there is like only one thing, interest on loan, which is like a given to the partner by the firm at 6% per annum. And finally, the admission of a new partner must be done only with the consent of all the partners.